CEO Interview is the program for us to invite senior execs from the companies with great growth potential. The talk presents the opportunity for the audience to get the direct information and updates from such companies up close and personal. Are you ready? Let's go! So Joe, welcome today to join me for a call here. How's your side of things here? We're both in Vancouver. Are you in Vancouver too?
Yeah, I'm just across the bridge in West Van. But yeah, we have whatever semi-lockdown, but
Yeah.
People are still getting out and about, and I hardly drive the car. But I mean, with what we do, most of I've been working out of my home, for the last 5-6 years. So not much change for me, but now there's a lot more people at home.
Yeah. So do more of these calls and people because everybody else is doing the same thing too.
Yeah, I mean, I'm sort of used to doing these because we've done them before, but definitely there's a lot more webinars and a lot more events like this as people don't have conferences and things like that. And that might change into the future. People might do less of those if webinars catch on with people.
Yeah, so maybe I'd like to ask you about the macro things of the metals. Which metals of the space are you really in right now? I believe gold must be your first choice. Is that? Maybe you can comment on that on the metals.
Yeah, sure. I mean, there's the issue with time frame, and so at the beginning of the year, I set out a premise of with respect to time frame. Long term is usually how we play it. And so, yeah, precious metals, I liked it for, the amount of negative yielding debt out there and, the penchant for central banks to continually print money. And so gold was always that. And then for extra leverage, a silver exposure. But I also liked the underlying issue about, reduction of greenhouse gas emissions and that environmental sort of lobby, which a lot of countries are implementing, whether it's China or Europe, such that I wanted exposure to that. And to get exposure to that, copper and nickel in the batteries, as well as, potentially even uranium as people move to, cleaner energy. Lithium, and also in the interim before EV batteries in cars really takes off, palladium for catalytic converters for internal combustion engines.
So what do you think of the copper right now in terms of what kind of stages you're looking at companies in the copper space too?
Yeah, so I like copper just because it's the easiest one in that future world where it's more electrified. Copper is probably the best one with respect to exposure because of the higher loading of copper in a lot of products. But right now, with China just now recovering from its the COVID-19 impact, just coming back online, and the U.S. basically going down, and also most of Europe and that. Right now, there's not a lot of demand, whether it's oil, whether it's copper, whether it's anything, any commodities, the demand is low, such the prices are low, and a lot of the producers aren't making a lot of money. But that doesn't change the fact that 2023, 2025, we don't have a lot of projects coming into that window. And so in terms of copper, I'm playing it more from the development side to fit that window and from the exploration side.
Okay. Yeah, let's talk about some of the major activities too. You follow the major companies, how they do also. We've seen quite a bit of M&A in the gold space in the last couple of years and the producers. Do you see this will continue on this year or next year?
Yeah, I mean, the underlying theme of a lot of that consolidation was, one, divestments by the majors as they did their mega mergers, more than, a year and a half ago, I guess. All of that spawned more assets than they want. And so they basically wanted to focus on their core assets and sell other assets, whether they were profitable or not. The problem was that they didn't have a big impact on their bottom line. And so the Newmonts, the Barricks went into a lot of divestment. And who's been acquiring those have been, mid-tier companies that want to get bigger. And the whole issue with the mega mergers was to increase their capital profile to compete with the ETFs. And now with the mid-tiers, it's getting up to a capital profile, getting to a point where they can issue dividends such that they can attract more generalists in a positive sentiment gold price environment. And so I think that's the backbone of a lot of the M&A. And there's nothing to say that we won't see more of it, but the premiums may change. And the last 6 to 12 months, one of the big things was a capitulation by the seller. And so there wasn't a lot of, I want this price or I want that price. They could come to a price a lot quicker. Now with the gold price going up, it might be harder to convince some people to actually sell.
I see. Yeah, let's continue on with the major, how they're doing. They seems to be doing a more, I would say, investment or strategic investment into the junior market last few years. And what's your comments on that? Which major do you think is doing the better job in doing so?
Okay, so that investment, like the Newmonts or the Barricks investing in smaller juniors, I mean, that's been around for a while. Tech started doing it maybe 20, 30 years ago. When I was at Newmont, we had a portfolio of equity private placements, equity investments in companies and that. But now, since the time that companies were getting hit by lowering their G&A, lowering their cost profile, they also lowered their exploration expenditures. And at that time, they were sort of substituting their exploration expenditures with these investments in other companies that would do the work for them. Because the issue for them was a bit like, with all these environmental safety issues that most big companies have to follow with respect to protocol, they might be spending $1.20, $1.30 for every dollar a junior might spend. And so their ability to spend would be much higher, so let the junior do it. And also they'd cut back on a lot of their staff. And so that's probably ratcheted up the amount of strategic investments that our majors are making. You see like from the diversifieds, you see Rio Tinto doing them. You'll see Newcrest on the gold side, Newmont, Barrick, everybody's doing them. I don't know if I could say, this one's much better than that one. It all depends on the individual corporate development. And even within a company, sometimes you could see one corporate development team on one part of the world do a lot better than another one. So it's hard to sort of say, these are the guys and that's smart money. If they do it, you're good. But it's nice to see people with deep pockets supporting exploration because the financing risk, as you well know, is pretty high for juniors.
Yeah, it's much higher these days. And just talking about juniors and other exploration side of things, you've been around for a long time. Have you seen any changes in terms of innovations and technology-wise? Because the industry always being accused by lack of this innovation in terms of how we explore. Do you see companies doing a better job in terms of using technology and doing so these days?
Yeah, I mean, the thing is that productivity for exploration is probably a lot better. We've got, ability, when you take out a meter of core, which is, the size of a bottle of Malbec out of the ground, that could cost you anywhere from $250 US to, up to $400, depending where you are, how you extract it. And so the whole idea is to get as much information as you can out of it. And, I see a lot of companies, and Newcrest does it more than anybody. They use this core scan technology to basically be able to extract as much information out of every individual meter of core. And so that helps them with respect to understanding the geology, the mineralization and that. And also we see, on the processing side, we see much more technology with respect to ore sorting, different ways of grinding, crushing, which is pretty boring stuff for most retail, but it helps a lot with respect to the industry because really, I mean, it's about driving costs down and getting more when you're trying to recover. And so the more you could do that, you run a more highly profitable operation. But on the exploration side, also, I got to say that the use of drones has really helped with respect to getting data, whether it's geophysical, whether it's topographical, that sort of stuff helps a lot with respect to mapping, especially in difficult environments.
So when you take a look around the world now, which countries or belts that you feel most excited about their exploration potential still at this point nowadays?
Well, I mean, I bought two positions in companies that are exposed to Japan, and Japan for me was very interesting. It's a epithermal porphyry related epithermal environment on the Pacific Rim that has really been underexplored because most Japanese companies haven't been exploring in Japan. There was a moratorium on mining that's been lifted, and there's basically Western companies working into listed in from Canada, and so that. Epithermal environment that has been untested is now being tested. So for me, that's exciting. One of them, like Japan Gold, has just signed, to your point, a strategic alliance with Barrick. And so that's a multi-year thing because they have a lot of projects as they were one of the first movers into the country. So that's exciting. But then taking the other route, what's also exciting is Australia. I mean, still they're making discoveries there. The gold price is almost $2,500 Australian, so the local price is great, and they're still finding new things. So even though it's not a new jurisdiction, I mean, the work they're doing with the new exploration tools, is helping them find things that the past generation missed. But also they missed lower commodity prices as well. It was less economic. But so I still find that exciting. I still find a lot of things exciting that are happening in known jurisdictions with known endowments.
Yeah, there's a good insight there. So I throw you the last question of this call, and what's your favorite stock, or in terms of stock pick right now, in terms of the exploration?
Exploration? I mean, I would say in terms of exploration, I'd say a high gold, which HIGH on the venture that has this asset called Johnson Tract in Southeast Alaska. It's very high grade. It's polymetallic. It looks like it might be a gold-rich volcanogenic massive sulfide deposit. I'm not sure. I haven't been to site. But what I like about it, it's thick and it's continuous. And it's high grade. And so if we could find more of those, you could cobble together ounces pretty quick. And so they do have catalysts coming up with respect to a 43-101 compliant resource. It had been worked on before, but it had a hiatus where nobody had touched it for a couple of decades. So that's exciting. But right now with all the COVID-19 issues, the risk is, the delay on the start of the exploration program into the summer. But hopefully that'll get lifted and they'll be up there drilling in July.
Yeah. Okay. Good. Yeah. So let's watch out for this stock in the next 6 to 12 months time frame. Yeah. So thank you for your time, Joe. We'll talk next time when we see each other.
Okay. Thanks very much, Gilbert.
Thank you for your time.